5k deposit mortgages have arrived. Accord Building Society, as of today, the 27th of March 2024, have announced a new mortgage product that only requires £5,000 as a deposit for a property purchase. They are the only lender within the market to offer this type of product and this type of product offering, and in this video I'm going to tell you the exact lending criteria required to qualify for this mortgage product. So here's the email I received this morning from Accord Mortgages. Here you go. We're excited to announce the launch of our new and innovative 5k deposit mortgage, available from today at 9 AM. This unique product is designed to help your first home buyer clients purchase their first home faster with just a 5k deposit, and is available for loan to values over 95% and up to a maximum of 99%. To qualify for this product, you're going to need to meet certain lending criteria. Key criteria is at least one applicant must be a first-time buyer defined as never having owned a property in the past, and no background properties on application, meaning no buy-to-let properties, no other residential properties. The minimum deposit required is £5,000, and applications that achieve the higher credit score required for lending above 95% loan to value. So to pass credit score at this 95% or even 99% loan to value, which is the highest type of loan to value you can get as of today, you're going to need to have a pretty much squeaky clean credit score, because lenders have something called an internal credit scoring system. So the loan to value will be dependent on the internal credit score that you need to pass. So you can imagine right now, currently at 5%, which is the norm on what a deposit is required, the internal credit score is really high. Now to pass at 99%, for example, all I can imagine is the internal credit score is going to be really high. So you're going to have a squeaky clean credit report, no late payments, no adverse credit, definitely no CCJs and no defaults. And the only way you're really going to know if you qualify for this product is by obtaining an agreement in principle. Other key things you need to know is the only product available is a 5-year fixed rate product. The maximum age at the end of term is age 70. This is only available for loan to values of 95.01% and above, up to 99%. It's only available for house purchases between £100,000 and up to £500,000. The minimum loan is £95,000. The maximum loan is £495,000. Maximum LTI, so maximum income multiples available, is 4.49 times. The mortgage is only available on capital and interest, and it's available for new house purchases only, and is subject to affordability criteria and credit score. It excludes purchases of flats, new builds and properties in Northern Ireland, not available for applications where an applicant does not have permanent right to reside in the UK, not available for joint borrower, sole proprietor, Cascade Score L Boost LTI product. The good thing is it's not just for first-time buyers. So what I mean by that is if you're a first-time buyer and your partner, your husband or your wife is not a first-time buyer but they don't own any other properties, you can do a joint application. So that's a really good thing. Now, in my opinion, does it work? Yes, it can work. It can work for people who can't get onto the property ladder, but then can potentially buy a home and they know they're never going to move ever. Because, for example, the loan to value is really high. It's a 5-year fixed rate product. The internal credit score is going to be a lot higher. It avoids the possibility of having any negative equity in the future if your property value does go down in value. So what that means is that is your loan amount higher than your property value, because if you're living in it forever, it's your forever home, the property value in theory doesn't make any difference to you because you've got something which you can call your own. If it's your first purchase and you might look to move in the future, can you commit for 5 years? If you're reliant on the sale of your current home to buy a new home and your property goes into negative equity, that could leave you stuck. But in theory, this product is going to be available for anyone who's got a really good credit score. Now this is new, so remember, until you obtain an agreement in principle, you don't know if you're even going to be able to qualify for the product. Because the lending criteria is one thing, but you passing the agreement in principle and the internal credit score is another thing. What are your thoughts on this? Is this something that could help you get onto the property ladder, or would you stay well clear of it? Let me know thoughts in the comments.